Hello, hello, hello. How's everybody doing? Hope everybody's having an awesome weekend. This is 50 pips on the 20th of December, 2015. No trade calls, no recommendations. The fact that you're listening to this means you've read to understand you accept all the disclosures on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So I hope everybody's getting ready for the holiday season. Keep in mind that we've got, we've had a short and we'll have a short trading week coming up. So again, Monday, there's pretty much nothing on the calendar. On Tuesday, we got that final GDP out of the US. We got trade balance out of New Zealand. Wednesday, we already have, Japan's on holiday. We've got current account out of the UK. We got GDP out of Canada. We got durable goods out of the US, and then a bunch of, medium importance data. We've also got those crude inventories out again. And then we'll go into a half-day trade on Thursday rather, right, with unemployment claims coming out, and then we've got everybody's pretty much going to be off on the 25th. So keep in mind that going into this week, shortened week, holiday week, a lot of people are going to be off. So, usually you have less liquidity, you could have some funky moves, and usually things would tend to stay in range. But if they do break out of the range, if they get a bit of velocity because of the short of the less liquidity being around, the moves can be aggressive. A lot of times, unless it's on something fundamental, those moves will probably retrace by the time the holiday season is over, right? But it is what it is, so just keep that in mind. So what should we look at going into this week? So there are a couple of things which I think are interesting. Now, first of all is gold. If you look at gold back on this daily, right, a lot of people were looking for these 1050s to break. And we said, just keep an eye on this action because it looks like we're getting very, very decent support, right? And once we came back into these, also based on what happened on the market, you see that this level is holding quite nicely. So I think that in the lower liquidity chop, should this level break for any given reason, you could easily see an aggressive move down, and there's not an awful lot of support to the downside. Probably market, if you get daily closes below there, will try and take a big stab towards the 1,000 mark, right? So sorry to the, but basically, I think here, based on what the market is also doing, right? You'd have to expect gold to try and bounce a little bit, right? So the level I would keep my eye out for is the 1100, right? As long as we keep below there, then you should see sellers. But I would expect to see an awful lot of chop inside this zone with probably, unless the market really falls out of bed, the market, gold pretty much staying inside this range. I still think we're setting up for some kind of a bounce, maybe all the way back into the 100 or the 200 DMA coming back down, but it's a really difficult one to call going into a holiday week. So I'd say, base support 1050s. If we hold below very, very heavy on any bounces, this upside previous support around 1080s, 1100, that's going to be attracting this week. Okay. Now, cable, we discussed this a lot, and we said, there's very little reason to try and fade this to the upside as long as we keep on getting those daily closes below the 50-80s. We'd expect those 40-60s to come into play. So, really can't complain here. Very nice action on cable. And if anything, this is the first place where we'd expect to see some kind of bounce action, right? So price doesn't only move in one direction for a sustained period of time. We like to think of healthy markets. So even though this is looking very heavy on any bounce, still these 50-80s are going to be key resistance. We expect that even though we might try and break lower early in the week just to flush some weak stops, if we're going to, if we get daily closes below this zone, this is just really, really heavy. But if we're looking for a healthy market and some kind of a place for it to pause or some kind of place to look for some tactical longs, around these 48.60s, 48.50s, that'll be a place to look at. So I think we're approaching a very interesting support zone for some tactical plays. I don't look to be extremely active this week, but as much as up here we're very bearish here, we'd be lightening up looking for possibility of a little bounce here. CAD is going to be very interesting because basically this is just skyrocketed higher also with pressure on crude, and we came back into that 140. Now that 140 came very, very quick, at least a lot quicker than we expected it to come, following the aggressive break, going to all-time highs there, or at least levels which we hadn't seen in an awful lot of time. I think the last time we saw the market print there was a 203s, something like that. So again, here is very nice. And the action we saw as everybody was panicking here, tried to clip some stops, and then we got a very nice little reversal off that level. We sold off about 140 pips or so. It still looks relatively big. So the way this is trading is you'd have to assume that the path of most pain is for the market to still try and clip some stops to the upside. Clearly, this is not a level where we would be interested to get long, but we would be very focused here because if we can't break above the 140 mark, or if we break and we can't hold, I think there's an awful lot of opportunities for some tactical scalps to the downside here. And you see how aggressively it moved here. So if anything, in terms of velocity of the move, in terms of aggressive levels to try and scalp it, probably failures around this 140 are the best bang for your buck. So again, focus here. I think this is something worth highlighting. Action around the 140 on CAD is very, very interesting. Again, on crude, what we said is, as long as we broke back below this key support and we couldn't get a daily close above the 35s would be calling, right? So here it's just holding very heavy. So there's no way we would be looking to short here. We think, the closer we approach the 35, the more interesting it will be for some kind of short bounces, and the bounces can be very aggressive. But, unless we start to trade back above the 37.70s, this will likely continue to hold heavy in this whole area. But again, there could be some interesting trades around here. The levels of interest for us are going to be the 37.70s, right? The 35s, and then back into the 32.20s, not really trying to catch it in the middle of nowhere. Euro USD, again, very nice action. We've been talking about this area for a long time. We were very bullish into the ECB. We talked about it live in the Sunday Outlook. We got a beautiful bounce, and then what did we say? You have to respect this resistance. If anything, this is the place where you want to look to get shorts. This is where you would expect the shorts to come in, and we got a beautiful reaction down here. Now, also, technically, what's interesting for students of healthy moves in the market, right? What you can see is after we put in that range on the FOMC, basically that range for the day, you saw some very nice action, right? When you get that area and the next day you break below, any bounces are fairly decent shorting opportunities. Now what you want to keep an eye out for is the fact that it's not getting any traction. So as long as it holds below, that's FOMC, oops, not what I wanted to do. As long as it holds below that FOMC range low, you could probably see attempts to the downside. But if it starts to pop back above, I wouldn't be surprised to see it back in mid-range, catching a little bit of a bid tone. But again, I don't think there's an awful lot of super interesting opportunities in Euro here unless you're already positioned in the trade. It might be a bit of a slow chop, a bit of volatile chop. I think there's a lot more, other interesting charts out there. USD JPY, not an awful lot. We're still stuck here inside this range on the daily 50, 200, and 100 moving average, smack in the row. We've been talking about interesting tactical opportunities to get short there for a move back into the 122s. I mean, we got 121s much quicker than we expect. But all in all, we're not too interested here. We continue to only be interested in playing the extremes. Higher, low range, not so much the middle of the range. But, very nice move there. It was a bit of a tricky one because when the equity started to sell off aggressively the first day, yen was holding bids simply in anticipation of that BOJ. So I think a lot of people were frustrated with the bid tone in USD JPY. But then once BOJ disappointed and the way equities were trading, that was a very nice short. Caught up a lot with the velocity of that move. speaking of the ES, I mean, again, we really can't complain because we've been talking about this every single update, basically, that we're looking for tactical opportunities to short and play move back down to the 2000 and possibly even lower. Right here, we're pretty much at the middle of the range, right? We'll have to see how we trade. Closes below, very heavy. Would not be surprised to see 1900 print. If we can catch a little bit of a bid, then 2050s attract. Right here, shorter term trading range, 2050, 2000, 1950s. That's going to be, where the battleground. Now, again, you really again, for students of price action, the way markets tends to work, and the way we trade to tend to work around these FOMC meetings. Also, we saw very nice selling in all those highs. All those attempts back into that 2100. Fairly classical move. And then, as we always say, right, we've got this FOMC range here highlighted, right? And what we know is that once something starts to get Momo, we've talked about this every single time for years, once we start to get Momo on something like an FOMC day, it makes very little sense to try and fade that move. The first move may be the wrong move, but after, 20, 30 minutes, 45 minutes, we start to get going. Usually there's no edge to really fade that. You're just going to make life much harder for yourself. If you like to fade it, it's much better to wait for, following day, next, 30, 40 hours, something like that, 24, 36 hours, whatever that may be. And here we got a nice little pop there. You got that 1 hour negative close the next day, and then bam, look at the acceleration. Very technical, moves back down, pops previous resistance, acts as resistance again, and continues to accelerate lower with very, very nice action. Because here into the close, basically, a lot of people were trying to get long here, looking for this to hold. And then it just, you just got a smack down right after the close. A lot of people looking for end of day bounce on that Thursday. And the same thing on the Friday, just hold very heavy. Then people are trying to look for a late day bounce, and then bam, they had to puke it on the close. So fairly nice action, very aggressive move. And right here, we're stuck at a pivotal level. So clearly you'd have to, with the move being so aggressive, we really would not be chasing lows, but it's looking very, very heavy. So we'll have to see if how this trades. But below that 2000, it starts to hold very, very heavy. So keep in mind, it's a short holiday week. I think there could be some interesting opportunities. Clearly, this is a week where we would look to trade much smaller, right? Much smaller than usual. Activity very, very low, unless a lot of extremely nice opportunities arise, but still with very, very small size compared to our average throughout the year. So I hope this was useful, guys. If I don't talk to you or see you around on Twitter, have all the best for this holiday season, but we'll try, we'll be around next week, definitely Monday, Tuesday, Wednesday, and then we'll have to see how things go. We'll try and do an update next Sunday if there's something interesting to talk about. But again, thanks for listening. Have an awesome one, and talk to you guys soon. See you around. Bye-bye, guys.